All right, everyone. I got the perfect one for you today, and this is going to be Now, Servicenow stock. So they had their earnings today. Looks like they're getting pretty beat up after market. So we're going to look at this, see what happened, what's going on, and just let's see what the company even is and what it does real quick. Artificial intelligence platform for business transformation. AI platform connects people, processes, data, and devices to increase productivity and maximize business outcomes. It's intelligent platform. The Now platform is a cloud-based solution that helps enterprises and organizations across the public sector and digitalize workflows. Um, all right. I guess this is a SaaS. This is a SaaS company, but they're sure making it seem like it's an AI company. So must be doing like a pivot or a switch, but that's it. So we're going to do a few things. We're going to look at the latest earnings, the valuation, and then a few kind of other things. So this is the data that came out today. So you can see year over year, you are seeing some good subscription growth, good sales growth overall. And the cost of the revenues also went up, but, is more than offset by the revenue growth. So that looks good to me. And the gross profit is increasing. You can even see here the total operating expenses also increasing. Sales went up by about 150 million. And then the research and development and then the G&A also went up by a little bit, but all kind of in accordance with the revenue growth. So nothing alarming there. And then you can see pretty strong. Just on here, like it looks good. But I'm gonna bet the reason why this is down 12% after hours is this company has a market cap of $106 billion. So you got to ask yourself, do you need $106 billion to make a net income of, what is this, 470 million? And about half a billion? That's putting your PE ratio, pretty high. So you got to always think about that does that justify that valuation? And sometimes the market, if they do have a premium valuation, like what Servicenow has, if the sales growth isn't what they're expecting, then, Wall Street will punish it. I don't know any of that. I'm just throwing it out there. Please let me know what I'm missing or not thinking about. I'd love to learn more. So that's the first thing that I'm seeing is that the earnings looked fine, but, this valuation is pretty rich. So we'll just kind of we'll summarize here. You can see constant revenue growth. The COGS also has been growing. Nothing that's really sticking out to me there. I want to see the operating income for the year for 2025 at least was about 2 billion. So again, you're looking at a company with 106 billion market cap for, and they make about 2 billion a year. So you always want to check and see, like, does that valuation make sense? So there you go. Strong gross margin. That's good. So that's kind of interesting. I want to ask a couple things here. I want to check back into the summary. 1 billion shares outstanding. That's a little higher than I like to see it, but it's also not terrible. Again, the higher this number is, the more that the earnings per share is split up. So the lower the shares outstanding, the better. And I should clarify, it doesn't necessarily mean that it's better. It just means that less volume is needed to move the stock, the lower amount of shares outstanding and like the free float and that sort of stuff. So let's ask a couple of things. Why is now the stock down 12% after their earnings? day. I'm going to bet it has something to do with sales growth, forward-looking concern. Met or beat expectations, yet forward-looking concerns. Cut its full-year operating margin outlook and guided margins well below Wall Street expectations. Signals higher costs, lower profitability ahead, even if revenue is growing. In growth stocks like SaaS, future margins matter more than current results. So again, this is a growth guy. It has a premium valuation at like 60 PE ratio. So that's a big deal. They made an acquisition cost. Great. Yeah, expectations. This is here again. The expectations were high at that kind of valuation. They want really good growth. So let's just check something real quick. What is the PE ratio of Now stock and how does it compare to years? MSN was saying it was 60, but they have outdated data. So yeah, about 52, 56. And then the forward P ratio is 21, so that's interesting. So the trailing PE ratio is more expensive than its peers, but the forward P ratio is in line with its peers and still not cheap. So important to note. And its P ratio is above the sector averages. So, I want to check what's another thing I want to see here? Are insiders selling or buying now stock? Okay, so that's interesting. Some buyers. CEO bought some in an open market buy. Other insiders have sold about 1.7 million. Okay, so that's pretty mixed. So, yeah, let me know what I'm missing on this one. It just feels like these software stocks are just continuing to get obliterated. This earnings has sent a shockwave through the other SaaS stocks and kind of hit them after hours as well. What I'm seeing here is definitely not a dying company, but you're looking at a multiple compression. You're looking at the growth is like it was saying, the forward growth isn't kind of what Wall Street wanted. So yeah, this is always tough to see if you're in this. I don't like seeing anyone be in a position that's been getting beat down. Let's check over the past year. Yeah, it's just been getting beat down this whole year, and that's just tough. It's tough to see, and then with the valuations, kind of like when when does this turn around? Does it turn around? So yeah, this is just my first look at it. So let me know what I'm missing, what you're thinking about it. I think it's been really interesting to look at, and I'll see you on the next one.